Okay, good evening, everybody. Let's go ahead and get started. Want to welcome everybody here. Also want to give a shout out to those of you watching this in the recording. Want to say hello to you guys. If let me know if you guys can hear me in the chat box there. Just give me a little wire. Yes, there's let me know that you can. Awesome. Okay, perfect. Well, let's go ahead and jump into this. We're going to talk about the COT report tonight. Obviously, we do this every week. And I want to show you guys some things that I've been back testing with the COT report that I think will make the weekly trades a little bit better. So I'm excited to kind of show you um, what I've been doing and kind of my ideas with it and kind of let you underneath the hood here to see what we're doing, which I think will be really awesome. Before we get started, as always, I need to remind you guys about the risks involved in this market. You can lose all or more than your initial investment if you're not careful. So please be aware of how many pips you're risking on each trade, in addition to how big your lot size is, and ultimately how that would affect your account if you were to lose money. So make sure that you go through that process each and every time that you take a trade. All right, guys. So I think I'll jump right into it, and we might keep this class a little bit short. Obviously, you guys, a lot of you spent an hour with me already, and thanks for coming. I really enjoy those. These evening webinars are pretty fun. I feel like they're classes where we can kind of really dive into topics that are really important, help you guys kind of conceptualize different aspects of either risk management or the trading, the COT report, which I think is really, really good. So thanks for taking the effort and the investment to come and come to these classes. I think it really will help you guys um, pay yourselves in the future as you can continue to come and make that effort. You'll understand the markets a lot more. So, okay, awesome. Well, let's jump into this. So, yeah, I think for those that don't, I won't do a big basic introduction. We've got other webinars on the COT report. So, but I'm just going to briefly just mention for those that might be new, um, because we did have actually quite a few people join the program this week and last week. I don't see a lot of them in the live call. I know a lot of them might be watching this in the recording. Some of them indicated that, so I will just briefly just mention what the COT report is just for them, and then we'll dive into some of the more nitty gritty of what we've done or what we're thinking about doing with the COT report, which I think will be awesome. So the COT report is, it stands for Commitment of Traders. It's actually this, again, I'm just going to kind of give you a real brief rundown. If you need more information, I'd be more than happy to give you a more detailed introduction. But CFTC, they're a financial regulatory authority here in the United States. They manage and make sure that things operate correctly in the futures and commodities markets. And one of their umbrellas is, or one, they also cover the Forex world as well. And so they regulate companies like Awanda, Forex.com, and they also look, anything Forex they do. So on their website, they have this commitment of traders report, and this is it right here. And you can actually, this is what a commitment of traders report looks like, and it's just basically an entry of. I like to zoom in, by the way, because it's kind of hard to see, but I'm going to search like the euro here. Um, you can find different currency, not pairs. These are individual currencies, and you can see what the banks have been buying and selling. So these are their long and short positions by the banks, right here. And so you can see how much they're buying the euro, how much they're selling the euro, and so on. This is this is really good information. So why is it good information though? Because here's the thing. I'm just a dude, right? And we're all just traders, and we're trading, and we're not professionals who work on Wall Street, who are in the know, who spend 80 hours a week trying to figure out what the market's going to do. I don't want to do that. Like, I have other things I want to do. I got other things to do. Before I did these webinars today, I was doing the dishes for my wife, and it was nice. I actually, weather's great now because it's April and things are starting to look good again. And so I like to go outside. I go on these 2-hour walks every day. That's what I like to do, right? Like, I enjoy doing that. I like trading as well. I love trading, but I don't want to spend 80 hours a week doing this, right? Even though I love it. So I really appreciate this information because these guys kind of already are really good at what they do. And so I like to try to figure out unique ways on how I can use this information to my advantage and to our advantage in taking trades, right? So that's why we use the COT report, because I want to see what the banks are buying and what they're selling. And specifically, like right here, this is the change in contracts from the previous week. So you can see like, okay, on the euro, they decreased their long positions by 12,000 from last week. They also decreased their short positions by 28,000 last week. So there's been outflows of the euro on both the long and short side. So that's something we pay attention to when we're looking at the euro here, right? Um, and then, you could look at the British pound, you search GBP, and here's the British pound. You can see they have, oh, that's interesting. They have a flat 80,000 contracts, period. Long on the pound right now, 51,000, 52,000-ish contracts short. And you can see last week they also had outflows by 18,000 on the pound, and they had outflows as well on the short side. So kind of interesting to see that. And so we analyze this information, right? And what we did is we put it together on the scanner. So we have Steve's scanner right here, which looks at several different aspects of the COT report, different angles of it. There's not just one way to look at it.
Hey traders, it's Steve from the future. I hope you have enjoyed this video so far. If you are getting value out of this video, be sure to hit the like button, click the subscribe button, and share your trading thoughts. I read all the comments, so feel free to ask any questions you have there too. On a side note, I host live trading calls like this one you are watching every day. Some of my biggest trading secrets I share exclusively to just the members in my program. I host these live trading calls every day, Monday through Friday at 11 a.m. Eastern. I also host a basic training webinar every Monday for the newer traders, and the regular COT report and sentiment trading webinars every Wednesday night at 8 and 9 p.m. Eastern for the advanced and aspiring traders. All of these calls are recorded and promptly posted on the members' trading calendars at the conclusion of each call in case your schedule does not permit you to come to the live call. All of my members have complete access to the scanner. We call it Steve's Scanner. This is an institutional grade trade alert scanner that picks the direction of the week on all 28 major currency pairs and includes trading instruments like gold, silver, NAS 100, US 30. Just in the last 90 days, I have made over 3,000 pips just taking the top trade signals from the scanner at the beginning of the week and then just holding those trade alerts until Friday. If you want access to the scanner, you can start a 14-day free trial with the join link in the description to get started. Lastly, if you really want to be a full-fledged VIP member of my program to get access to things like the basic training course, live signals channel, Steve's scanner, trading calendars, and the one-on-one calls with me throughout the month, you can use code YouTube50, that's YouTube50, no spaces at checkout, and save $50 on your first month. Again, just click the link in the description below and apply that coupon to become a VIP member, and I look forward to helping you with your inevitable trading success going forward. Now, back to the video.
You can look at it as far as like a snapshot perspective, like how much they've bought and sold total. You could also look at it from what they're shifting to, and shifting, like, are they shifting positive, or are they shifting negative, right? Like this is like that's really important information, because we'd like to see all angles of the COT report, right? So that's what the scanner attempts to do, and we try to deliver the very best signals we can each week. And we're trying to get better at delivering even more accurate signals weekly. And that's what I was hoping to talk about tonight, and some of the things that I'm working on in my free time when I'm not trading and doing some other things. And when I'm kind of do some deep work with the COT report, that's kind of the stuff I wanted to share. So one of the things that the most recent thing that we introduced to the scanner was like a month. No, it's been over a month. It's like 2 months now. So 2 months ago, we added this reversal detector onto the scanner. And this has actually been really, really cool, but we need to optimize this a little bit better. So this reversal detector, what it does is it looks at the like what the banks have been buying and selling more recently compared to what they bought like 10 weeks ago. So the exact equation that I use, I actually give it to you right here. I do the 5-week shift minus the 10-week shift. That's all that it is. Okay. And then it just spits out a percentage. And then you get this subsequent number here, right? So you've got the 5-week minus the 10-week. And so like if I filter this, you can see what the biggest shifts have been. Like, for example, the Australian Kiwi has a really big shift. So there's a 37.4% positive shift. And what that means is that when you take the 5-week and subtract the 10-week, you're left with a very positive number. And why does that matter? Because if you're left with a very positive number, that means that there's been a drastic change recently, at least over the last 5 weeks, that's been fundamentally different from what the banks were doing 10 weeks ago. And so, which direction would you expect the Aussie Kiwi to be going in the immediate future if that's the case? Well, positive, right? So these numbers, I've kind of already given you a way to interpret them, right? So you can see to the left of that number, there's a subsequent signal. So the Aussie Kiwi says strong buy, and which, like you indicated, Roger, that means it's going to go up, right? Or ought to go up. And that's what we're trying to so we take the numbers and then we turn it into English, right? And the English is to the left of it, which is right here. So if you're ever trying to figure out stuff, like this right here says 5-week non-com COT signal. And so this says like on the Aussie Kiwi strong buy, and that 5-week shift says 45.72. So this is the number, this is the English to tell you what that means, right? Like for example, this one on NAS 100, it has a positive number, but it's not that positive, so the signal is neutral. You've got another one right here on the euro pound. It says buy, but when you look at the number that corresponds to it, it's 12.31. So it's not like a huge number, and I've kind of determined what those thresholds are just through my own research and stuff. But it is big enough number that it constitutes a buy, and maybe you should start looking for buys, but it's not like, oh man, this is a strong buy, right? Um, right. So that's kind of, I think that's pretty self-explanatory with the scanner, but I want to make sure everybody understood how to use that and what that means. Okay, so one of the things that I think needs fine-tuning with the scanner is this the newest thing element we added 2 months ago. Because I've noticed a couple of things, because this is really actually, if you think about it, it's actually genius, but it's not fine-tuned though for the weekly signals. And so that's what I've been working on, because it really is, if you think about it, a very smart thing to do, because you're basically taking um, a shift of the scanner, a recent shift of the scanner, and you're taking a longer term shift and you're subtracting them from each other, and you're left with a percentage, a number. And if that number is really positive, then that means that the banks have gone on a massive um, change in direction. Okay, which is awesome. Now, here's where we need to change. This is where the optimization comes in. So, one of the things that I've noticed is that we're not catching these early enough. Okay. So, the reversal detector is not optimized enough yet to get us a like sometimes it's telling us about the reversal like after it happens. It's not necessarily as it's happening or just before it happens. And we need to get better at that. So how do we remedy that with the scanner? So I thought about it, like potential ways to do that. And I think the most obvious thing to do is, instead of doing like a 5-week minus 10-week, we need to do like a 2-week or a 3-week minus like a 5-week, right? Or something like that. I've even tried doing like a 3-week minus a 10-week. I've looked at that. Maybe I think where I found a lot of success is taking the 2-week minus the 2-week minus 5. Has actually been pretty good. And why has that been good? Because you're basically taking whatever's happened in the last 2 weeks with the banks, and you're subtracting it from the 5-week. And so you're getting whatever's happening most recently with the markets. Um, you're getting a number that accurately represents what the banks are actually trying to do. So I think that's actually been pretty good. Yeah, that's actually been pretty good. So that's what I've been doing instead of 5 week minus 10, I've been tuning it down and getting a more recent week, like 2 weeks or 3 weeks, and subtracting it from the 5 or the 10. And that has already been either one of those has actually been so much better. But yeah, let's actually take a look. When you look at the COT scanner, you can actually kind of figure this out. Let's look at the Aussie Kiwi, which is right here. I'm going to highlight it. You can see, for example, the 5 week is a really big positive shift, and the 10 weeks also positive, but it's not as positive. So if you take this number and subtract this number, um, you're left with the difference between these two, which is like 37 or something like that. It's a pretty positive number. Um, and what that means is that there's been this campaign of buying pressure on the Aussie Kiwi over the last 5 weeks. And not only does it tell you uh, that there's been a lot of buying pressure over the last 5 weeks, it's actually telling you that the buying pressure is sudden because you're pegging it against the 10 week, right? And this has actually been pretty good. So if you actually look at the chart of the Aussie Kiwi, that has been a thing. Like if you look at this, let's go look at this on a higher time frame. Let's expand this out. You can see that over the last several weeks, that has been the case. The Aussie Kiwi has, in fact, been on this massive rally to the upside. Absolutely. Like this has been going up and up and up pretty much since the end of February. This has just been going up and up and up and up and up, right? But we need to get, and so it's still a good signal. Like it's still telling us good information, but we need to catch this faster. We need to be aware of these changes in real time and get ready for them faster. Like I was saying. Okay, so an example of this would be to um, um, let's go back over here. So here's the COT scanner. So an example would be like, let's subtract the let's subtract this Aussie yen from uh, the 5 week. So you'd say, okay, let's take this number and subtract this, and let's see how positive that is. Okay, or let's take this Aussie franc, because that was the Aussie yen. Let's take this Aussie franc and take this number, subtract it from this number, and what's the difference? Is that a big difference? Let me see if I can find one with a really big difference here, actually. Let's see. Try to find one with a pretty big difference between the two numbers. Um, yeah, I'm just trying to find a pretty good example. Yeah, like this USD CAD is actually starting to flip here because this number's positive over the last 2 weeks. It's positive 2.52. But then when you look at the 5 week, it's 27.3. So if you take this number, subtract from this number, um, you're probably going to be left with um, um, let's see, that actually would still be, oh no, because you take this number, subtract this, yep, that would be negative. So you'd be like minus 25. And so that tells you that maybe there's a cool down happening on the USD CAD. Like maybe the USD CAD is starting to hit a top, right? And so you're starting to get notified of that beforehand. Um, Now time will tell. Let's see what the USD CAD actually does over the next couple of days, because if it does actually pull back here, then that'd be awesome, because that's exactly what we'd be trying to get after. Um, so anyway, that's one example of what we could do. Another way is maybe to take, instead of the 5 week, you take the 3 week minus the 10 week, and that's also been pretty successful too. So you just, you take this number minus the 10 week, and So you're getting a more accurate, like what's happened more recently, not just 5 weeks, but like in the last 3 weeks. What's been the change by the banks relative to what it's done over 10 weeks? And that seems to be a good way to do it as well. Again, I'm still back testing, trying to get info. It takes a while to do this. But like you could look at, I don't know, let's try to find a big difference between 3 weeks and 5 weeks. Or not 3 weeks and let's do 3 weeks and 10 weeks would be good. Um, let's see. Yeah, like okay, so here's 3 weeks and then here's the pound yen. So this pound yen, um, yeah, this pound yen right here is negative 0.96, but the 10 weeks is positive 27.35. So if you took this negative number and um, you subtracted like if you made this number even more negative, essentially, like if you took this number, like the absolute value of 27 and subtracted it from 0.96, you would have like negative 0.28. And that would give you, so that would tell you that maybe the pound yen is itching for a move lower at some point, that we're gearing up for that soon, right? That's kind of what that would tell you. Let's see if I can find another good one. Um, yeah, same thing with the pound Aussie would be the kind of the same concept. Um, it hasn't happened yet, but it's coming is the idea. Yeah. Anyway, so that's what I'm working on right now. That's really the biggest update is I'm just trying to go into the scanner and I'm trying to get this I'm trying to optimize this reversal detector because I want this to become a pretty integral part of the scanner in making more accurate weekly signals for us. Because if we get a number on here that's like if these numbers become very accurate, then that's going to really help with confirmation on the weekly signals. Already it's been doing pretty good. There's actually a lot of signals that have done very well this week, like the Euro Kiwi Long has done very well this week. I can't remember. Let's see, Euro Pound. This wasn't a strong buy though. It was just a buy. Let's look. Let's filter these. Okay, let's see. This has been good with um, this NZD franc sell. That was super good. Like we caught that really well. Um, this one wasn't so great this week. The pound os. I did actually stop out of this one, so that's a little bit of a blunder there. But the let's see, this NZD CAD has been doing well. Pound yen, I think, has gotten better, but I think I'm slightly down on that one. And then I haven't been trading gold, so. But anyway, so and that's not what constitutes the entire signal, but it is an important component of the signals that we do take. So I'm just trying to, like I said, I'm just trying to make this part of the scanner a lot better. All right. Any other questions about this? So I'm hoping to make a slight adjustment this weekend. I was going to do it last weekend, but I wanted to finish what I'm working on, just kind of back testing some things. So what you'll see is the only change that you'll see is instead of saying 5 week minus 10 week, it'll say like 3 week minus 10. I might do, again, it depends on what I do. I might do like a 2 week minus a five, but it depends on which which I find out is, which one think is better. Is it better to do a 3 week minus 10 or is like a 2 week minus five better? That's what I'm trying to kind of detect and figure out what's the best approach that way. And then that's what will get changed. But nothing will get added. It's just that the way we calculate these numbers will change with the reversal detector. And hopefully the game plan is to make that a lot more, that should make uh, that a lot more optimized. So we're catching these just in time. This week, I think the best thing that's helped us a ton is the 5 week shift. Yeah, the shift has been really good. Yeah, most of these have been super accurate. Like the NZD franc sell that's been on fire. The NZD dollar sell has been really good. This Aussie Kiwi has been getting better. Euro Kiwi strong buy has been really good. Um, this USD CAD was a good buy this week. It's obviously we've closed out of that now, and we didn't do this as a long term. This wasn't an overall signal this week. It's actually neutral. Um, the reason why it's neutral is because we got a lot of other things here that actually indicate a sell right now, like the reversal detectors starting to show up as a change. We're starting to see a change that way, and sentiment is indicating a strong buy right now. So that's why that's um, actually that's a buy, but this is neutral. Why is this neutral? Oh, it's because of the reversal detector. Yeah, that's why it's neutral right now. All right. Okay. So anyway, I don't really have anything else. Do you guys have any other questions? That's really all I had to update on the COT report is just that we're going to be tweaking this component of the scanner. We're going to leave the 5-week shift. I like the 5-week shift and it's very helpful. Um, yeah, it's definitely very helpful. I just want to make sure that some of these other things that we're doing are a little bit more optimized, specifically this part of the scanner right here with the reversal detector. So, and yeah, everything's good. Nothing needs to change with the crowded market, I don't think. We keep those going. Those are great signals when they come along, and they also contribute to the overall signal for the week. So, let's see. Lee says, will that change the effect of the overall trades? Yes, it will. It won't change like you're still going to have the same amount of signals ish each week. You're going to have your 5 to 10 ish signals each week, but the way it's calculated is going to be different because the scanner, the how you get overall signals is this: you look at the 5-week shift. That's one part of the scanner, and determining your overall signal for the week. It looks at the reversal detector. That's two. It looks at whether it looks at the long-term column, and if it's crowded market, it's gonna give a little bit more clout to that if we're crowded. But it also just looks at the long term as well. And that's three. And then the fourth thing the scanner looks at is sentiment. Um, and it grades all of those. So everything's on a grade scale. So depending on how strong sentiment is or how strong the long-term signal is or the reverse detector of the 5-week, if everything kind of like you can have a mix of signals, but you have a few that are super strong, and that could affect the signal drastically. But if you like, let's find one that's neutral right now. Like, here's some neutrals. Why is this Aussie CAD neutral right now? Well, it's because there's not a lot going on here. You've got a little bit of a 5-week shift, but nothing huge. There's no reversal detectors showing up right now. Though there's no long-term signal, and there's a slight sell signal as far as sentiment goes. So it's kind of a mix there, and that's why you're getting neutral on that pair. But when all these other things light up, that's how you're going to get the overall signal to tell you what's going on. So yes, that will be affected. Nothing will change. Like the 5-week shift, the way that grades is perfect. I don't think we need to change anything there. Um, the reversal detector will just change it. It'll optimize what signals we're getting. So that will affect the overall signals a little bit. Um, and the goal is in positive ways. I mean, I imagine it will be a positive effect on the overall signals. So yeah, and then long term, nothing will change that way. Sentiment, nothing changes that way. That just keeps humming along. Yeah. Let's see, Mohammed says, I love when the sentiment signal matches exactly with the overall signal. That's awesome. Let's actually look at those real quick. I'm just curious. Oh yeah, look at that. NZD franc, strong sell, sentiment, strong sell. NZD dollar, strong sell, strong sell. Nice. Aussie Kiwi, strong buy, strong buy. Those have all been really good this week, haven't they? So you got three signals right there that have lined up perfectly with sentiment. That's good. Well, keep me posted on that because, like, if there's correlation to that, that's actually stuff to pay attention to. Like, if you're seeing that the sentiment, when sentiment exactly agrees, um, then that's pretty good. Yeah, Aussie Kiwi is a little bit down this week. You're right, Lee, but the other two that that correspond to sentiment, those are looking pretty good this week. So, um, but you're right. Let's see what this Aussie Kiwi does by the end of the week, though. You're right. But yeah, keep me posted, Mohammed, on that. I'd love to find out if there's, a strong correlation between this sentiment agreeing exactly with the overall. That'd be good. Yeah, you're right, Lee. Yeah, I totally agree. Yeah, those two have been good, and the Aussie Kiwi is the only blunder as far as that goes with sentiment. So, and I try not to have one indicator dominate over the other. I've built in checks and balances. I will say there's a little bit more of a um like when we're determining the overall signal for the week, there's a little bit more that goes into when it becomes like when a long-term signal becomes crowded market, it's very likely that to be an overall signal. So long as there's not a lot of disagreement with the other metrics, that's going to probably wind up being an overall signal. So we do give a lot of clout to the overall or to the crowded market long-term signal, um, as far as calculating the overall when that specific thing happens. The other thing that's programmed into the scanner is the reversal detector. There is a little bit of a push to promote the ones that say strong buys and strong sell here, to the overall signal column, so long as there's a pretty solid number here. If this number is pretty aggressive, then that's likely to be an overall signal. Um, but it needs confirmation. We're not just gonna do it just because. And same thing, and like even the 5 week shift, you'll notice a lot of these 5 week shifts wind up um, being right here in this column as well with the overall. But all of these need confirmation. There's never going to be just like, okay, if it's crowded market, then it guarantee is no. There has to be some level of confirmation to create a signal. So, all right, guys. Well, I like it. So we'll let these continue to do our thing. We'll let our weekly trades continue to go this week. We got our price action trades in, so we'll probably talk. We'll obviously talk about those in the morning. All right, guys. Well, have a fantastic rest of your evening. Thank you for coming, and we'll see you guys in the next webinar.